The monthly paying dividend stock Realty Income just announced as of today that they are to acquire Spirit Realty Capital in a $9.3 billion transaction. Now, due to the recent higher than average interest rates and the rest of the market selling off along with this news, Realty Income is now officially dropped off a cliff, trading at a recent low of around $45.52 per share. But the real question that you and I as Realty Income holders most likely have at this moment is if or if not acquiring Spirit Realty is a good idea and what the deal entails. Now stick around because we are going to go over the entire press release and talk a lot more about Spirit Realty. So if you hold on to Realty Income shares, you are not going to want to miss a thing. So first things first, going through the Realty Income Spirit Realty press release that was announced on 10/30/2023. It says over 2.5% accretion to annualized AFFO per share in all stock leverage neutral transaction. Real estate portfolio enhances size, scale, and diversification to expand runway for future growth. Now, it seems like just a few days ago, Realty Income also announced that they were doing a $950 million cash investment into the iconic asset Bellagio Las Vegas, which definitely also had some investors sort of nervous. And at this point, it feels like Realty Income is playing real-life Monopoly, expanding their portfolio bigger than I honestly ever imagined. But to read on, it also says no reliance on capital markets to complete transaction. Realty Income is to assume existing debts with low in-place rates. So that's obviously pretty bullish. If Realty Income is to assume this asset with low in-place rates, this transaction as of right now is not really going to be sensitive to this higher than average interest rate market. It then says San Diego and Dallas, October 30th, Realty Income Corporation, the monthly paying dividend company, and Spirit Realty Capital Inc., which is ticker symbol SRC, announced today that the two companies have entered into a definitive merger agreement by which Realty Income will acquire Spirit in an all-stock transaction valued at enterprise value of around $9.3 billion. The leverage-neutral transaction is expected to deliver a 2.5% accretion to Realty Income's annualized adjusted funds from operations or AFFO per share. Additionally, no external capital is expected to be required to finance the transaction. The merger, once completed, will result in an enterprise value of around $63 billion for the combined company, enhancing Realty Income's size, scale, diversification to expand its runway for future growth. Then importantly, it says under the new terms of the merger agreement, Spirit shareholders will receive 0.762 newly issued Realty Income common shares for each common share of Spirit that they currently own. At closing, this will result in Realty Income and Spirit shareholders owning approximately 87% and 13% respectively of the combined company. The merger is subject to customary closing conditions, etc., and is expected to close during the first quarter of 2024. Also, it says the merger with Spirit is yet another example of how our size, scale, and unique platform value continues to create substantial value for shareholders, said Summer Roy, President and Chief Executive Officer of Realty Income. We expect that this transaction will create immediate and meaningful earnings accretion while enhancing the diversification, which we're going to go through in a second, and depth of our high-quality real estate portfolio. Spirit's assets are highly complementary to our existing portfolio, extending our investments in industries that we have proven to generate durable cash flows over several economic cycles. We also believe that this merger will strengthen our long-standing relationships with clients and allow us to curate new ones with partners whose growth ambitions can accelerate alongside Realty Income's. Moreover, our technology infrastructure investments following the abbvie merger in 2021 have amplified our efficiency in integrating assets and augmented our capabilities in maximizing the value of our properties. So all in all, this acquisition sounds somewhat bullish to me, although the market is definitely not taking it that way, at least not as of yet. But I think what's more important is that we dig a little bit deeper into Spirit Realty and see what we as Realty Income shareholders are sort of getting from this entire thing. So this right here is Q2 2023 supplemental investor presentation, and this is from Spirit Realty. So honestly, I haven't looked too deeply into Spirit Realty. I've definitely heard of it, but this is some of the information that we should probably know. So right here it says Q2 2023 overview. It says $694.6 million in annualized base rents, $9.3 billion in real estate investments, and 10.3 years WALT. Now, 2,064 properties are owned by Spirit. The occupancy is very high at 99.8%. The public ownership is around 51%. 86.5% of tenants with over $100 million in revenue, so mostly big companies, which hopefully means that they're mostly solid clients. And out of all these properties, there's 345 different tenants. So the portfolio seems pretty diversified. 308 concepts, 37 industries, and 49 states. Now, 22% top 10 tenant concentration. So just generally speaking, this REIT seems pretty diversified, which is pretty good. Now, some key highlights is net income per share is around 36 cents. 91 cents FFO per share. AFFO per share is 91 cents. They have $1.6 billion in corporate liquidity, $168.6 million in capital deployment, is a very low loss rental of around 0.2%, $66.9 million in dispositions, and 1.6% forward same-store sales. Now, the investment grade is also going to be important because this is going to show sort of how reliable and how well this company's done in the past. And overall, Spirit's rated around BBB, which is pretty good. It then says Spirit's underwriting approach, utilize proprietary tools and underwriting expertise to invest in high-quality single-tenant, operationally essential real estate, with a focus on industry reliance, tenant credit quality, and real estate strength. So now we get to the good part. We see the portfolio and the balance sheet. So this is going to show us the top 5 tenants as of right now, which we see Shopko at almost 30%. So Shopko is the majority of this portfolio, which is pretty interesting. Now, just off of first glance, I'm not necessarily super bullish on that because I'm not the biggest fan of Shopko, and they do seem like more or less a store of the past. But then we got 84 Lumber at 6.6%. We got AMC at 2.9%, Universal Pool at 2.3%, Camelback Resort at 2.1%. Then we have Walgreens at 3.8, Lifetime Fitness at 4.2. Most of these are pretty creditworthy big stores that I honestly wouldn't really hate having in my portfolio for the most part. Now, another important aspect is, of course, the industries and general merchandise, because the Shopko, of course, is the majority of the overall portfolio at around 30%. Then we have convenience stores around 10% and then distribution at around 11%. So around 50% of the portfolio is general merchandise, convenience stores, and distribution, which honestly I'm okay with. The only industry that I'm not really a fan of right now is office buildings. Next, it says net assets value or NAV components. Market value of real estate, $699.0 million annualized adjusted cash or NOI. Now, $4 billion of debt and equity, $3.8 billion debt principal outstanding, and $172.5 preferred equity liquidation value. Also important to note, it looks like the majority of Spirit's rates are pretty much locked in for quite a bit of time at relatively low rates, which is also important considering the current situation that we're in. And of course, by all means, feel free to dig a little bit deeper into Spirit Realty, especially if you do own Realty Income. I'm going to be doing some more homework myself, and I'll be sharing it on this channel, so make sure to subscribe. But with all that being said, it's going to be really interesting to see what Realty Income does from here and how long-term investors just like myself are going to react long-term. Now, from what I've seen so far today, it seems like the majority of Realty Income shareholders, at least on Twitter and Reddit, seem like they're buying the dip and have no problem with this acquisition at all. But if or if not, Realty Income is going to benefit greatly off of this, of course, only time will tell. But I want to hear from you guys down below when it comes to this Realty Income Spirit Realty acquisition and the way that Realty Income stock is currently trading right now. Are you currently buying the dip, loading up on shares, and locking in a well above 6% starting dividend yield? Or are you personally staying away and watching this whole thing play out? Comment down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.